Volatility kicking in today. We're going to look at a few stocks in here, but we're going to start off with core view here on the weekly chart. So not a whole lot of data in here, not a huge data set for us to go by just because this thing IPO'd only a year ago. But on the weekly chart so far, you can see that more or less we've been trading within it's about a $14 channel in here, the 71 to about that $85 range. So you can see that more or less we've been in here for quite some time. We broke out of it here for just a little while, about a month and a half or so. This at the beginning of this year in here, we went up and we hit those 114s in here and then came right back down. That 114 coming off of a previous support from back in September, but that was a new resistance. Rejected that pretty harshly and then basically kind of came all the way back down here. And now we're sitting in this channel. We were at the top of it in here, but pretty harsh rejection today, down around 8%, about $7 and some change from yesterday's close. That's with all the volatility kicking in here. You can see how tight our Bollinger Bands are getting in here in core view. So volatility overall, the VIX rose today. That means a lot of stocks had a big pullback. Core view was no exception to that. That's what brought you back down in here. That's what's kind of making all these things tighter in here. So your 9-day EMA, your Bollinger Bands, this 50-day SMA, even though there's only about 4 weeks worth of data in here that we can really go by technically. Even this is going to start to tighten up in here. So going forward, what are we looking at in here in core view? Well, we want to get a little pop in volume, and obviously we want to recover what we lost today. But if we can get back over above this $85 range, then we should be set up to focus on this new 50-day SMA right here that's currently trading at 101. Anything outside that, then we can worry about those 104s again. But until then, be aware that we might be stuck in this $14 channel just like we were here at the beginning of the year and for the past 3 weeks or so. So this could be a channel that's going to be hard to get out of. We might have to get everything else tightened up in here as far as momentum indicators, and then we can see if we can climb our way out of here. On the weekly, it looks like everybody's pricing. Well, I guess it's only one day, so you got about $3 worth of an implied move in here by tomorrow's close. Next week, you have right around a $7 expected move. So your weekly volatility about 91% raw. That you got IV rank of 16. So that's what's getting you your $7 expected move in here by next week. Following Friday, $10. The following, right around 13. So it's all going to be about that $85 range. If we do get a little push in here, a little pop in the market, and then we can worry about that 50-day SMA. Now, speaking about 50-day SMAs, we're going to take a look at the SPY in here on this weekly chart. Big pullback in here. We closed today at 645. That's actually closing under this 50-day SMA. But in aftermarket, or I guess in after hours, we had that quick little pop in here. So now we're trading currently about 647. So really we're above this 50-day SMA. So this 50-day SMA is currently trading at 646 here on the weekly chart. So we closed below it, but technically in after hours, we're above it. So that is what we're going to be keeping an eye on. We're not really care about anything else going into pre-market tomorrow. We're going to be focusing on that 50-day SMA. So depending on where we're gapping up or gapping down, that 50-day SMA is going to carry a lot of weight, either as a support or a major resistance. To the downside in here, let's say we start gapping down, we're going to be looking down here right around that 638 mark. Anything below there, really nothing stopping us until you get about 613. That's kind of like our max pain in here, but that should it should be a long ways away before we get all the way down there. To the upside in here, we're looking at right around that 653 range, and then anything outside of that, that 9-day EMA sitting at 667. Your RSI is creeping down here closer to oversold. We are now less than neutral, so we're in 38. We're in our 30s now. So let's see how we kind of recover, perhaps, to end this week tomorrow, and then see where everything lies as we open up a new week next week, especially on a shortened week with Easter and Good Friday coming up next week. So that could give us a little push in here to the upside, because most of the time, a shortened week, we always get a little pop in the overall market. So let's see if that trend continues or if the war is going to change everything. As far as our implied volatility goes in here in SPY, it looks like everyone is pricing right around a $7 expected move by tomorrow's expiration with an IV rank of 40. Monday, about a $13 expected move. You go all the way up to Thursday, around $18 of an expected move. Now, if we talked about our SPY, we got to talk about QQQ. This is going to be the ETF of the NASDAQ, just as the SPY is the ETF of the S&P 500. So usually the correlation between the Qs and the SPY is obviously going to be more or less it's a beta of one, right? It's always going to trade together just because of all of the overlap that we have in here and how everything's weighted with, especially now, the tech heavy stocks. But you can see right now we closed right here on this lower trend line. Obviously, a pop in after hours brought us a little bit higher in here, but as far as our weekly chart is concerned, we closed right here on this lower trend line. So we're going to see if this is going to stay tomorrow, or are we going to get a little pop in here, and then we're going to figure out where we're going to open at next week. So that is currently sitting right here, right around that 573 range. Anything outside of there is going to be 567. To the upside in here, again, we're going to be looking at that 50-day SMA in here. That's going to be at 577. Anything outside of that, then we're going to be basically looking at these 588. So that's kind of what everybody has on deck as far as a nice big resistance in here. And then next week, we can worry about where we're going to climb to or break down out of this overall structure, as you can see. As far as our implied volatility goes, it's sitting at 45. You have right around a $6 expected move priced in by this Friday, Monday, around a $12 expected move. Last but not least, we're going to take a look at Tesla in here just because this thing has got beaten up in the past few days. We mentioned in our previous video that we left this trend line on here. This past week, we did not get a breach of that trend line. So this could technically go right here. And we're just going to see if this trend line does hold coming off those new lows that we made last week. So going forward, again, it feels like a broken record, but we're watching that 50-day SMA that's sitting at 380. If we cannot breach that to the downside in here, we're looking at 367. Anything outside of here, 365, and then you're looking at 360. To the upside, above that 380 50-day SMA, you have that 9-day EMA sitting at 397, and then obviously that 400 psych level that's been rejected multiple times here in the past week. So that is what we're looking at here overall in Tesla. As far as our implied volatility goes in Tesla, your IV rank is relatively low. So that's with the VIX rising, with the pullback in the overall market. Your IV in Tesla is actually low compared to itself. So that's where your divergence is. That's why we always look at the stocks correlation with the overall markets, and we're looking at the VIX and the volatility in the market and comparing them, because this is showing us that, hey, Tesla's options are actually trading cheaper relative to itself over the past year than actually what the VIX is telling us. So the VIX is saying, hey, everything's juiced right now. But really, Tesla, you are technically getting good prices in here for the moves that they are making. So pricing in right around a $7 expected move by tomorrow's expiration, Monday, about $12. If you go all the way up to Thursday, right around an $18 expected move. Now, we keep on mentioning the VIX, so I guess we have to discuss where we're at in here. We keep on talking about that 23 to 28. Well, guess what? We're trading right in here up against that $28 level right here. We're trading at 27.43. So we're going to see where this thing ends up. Are we going to get back into 30s in here? How rich is this thing going to trade going into next week? But we keep on talking about that 23 to about that $28 range. That's going to be your new norm in here. And today was no different. So a pullback like we had in the overall markets really was no surprise. A pop in our VIX up to that $28 level, or really those high mid 27s, was not necessarily a surprise for us, just because that's kind of our new norm. But look at our overall correlations between Tesla and CoreView with the options chain and the overall market. So pretty large pullback in here for CoreView. Your options are relatively rich compared to themselves. Overall, a nice pullback in Tesla today with a pop in the VIX, and yet your overall volatility in your options chain is relatively low compared to itself in here, yet you still have that correlation with the market. So that's what we always are looking for. We're looking for the correlation between the market and momentum, and then we're also looking at the volatility. So let's see how we end this week going in to tomorrow's expiration. I guess it's going to be our weekly expiration, and then next week we can work on that shortened week and that Thursday's expiration, because we have Good Friday coming up. So let's see what happens overall in the markets. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.